Good evening, friends. Can you hear me? Any one of you can please confirm? Any one of you can please unmute yourself and confirm if you can hear me so that we can start the session. Atul, can you hear me? Okay, so yes. Thank you, Prashant. Thank you. So let's begin. Friends, it's indeed a great pleasure for me to welcome all of you to this session on how should a real estate company recognize revenue as per Ind AS 115, that is on revenue from contracts with customers. Incidentally, it was a couple of days back in one of the discussion with few professional colleagues, this topic cropped up in the discussion as to what is the right approach for recognizing revenue by a real estate company as in accordance with Ind AS 115. There was some confusion with regard to as to how a real estate company which is selling the flats or commercial premises uh, to the customers, where the arrangement is that the customer signs an agreement with the builder, and that contract will have a schedule of completion of the flat or the commercial office, and there would be corresponding obligation on the part of the customer to make the payment as and when a particular obligation, a particular phase of the flat or the commercial office has been completed. So from there, the idea of this webinar cropped up, and that is how we all are here. Friends, I intend to make this webinar an interactive session. So it's not that only I will speak. Uh, all of us belong to the finance community, the accounting community, the auditing community, and therefore I am sure all of you will also have your own thoughts and your views and your ideas with regard to the various things that we are discussing in this webinar or this in this program. So please feel free to contribute as and when you want to add something or say something. So we start with a small case study just to ensure that all of us are on the same page. XYZ is a real estate company developing a commercial cum residential project in Nagpur. Offices and flats are sold by entering into agreements with the customers where the developer is obliged to complete the contracted offices and flats in phased manner specified in the agreement, and the customers are obliged to make payments again in the phased manner linked with the stages of completion also specified in the agreement. All these agreements are duly registered with the Office of Registrar, Maharashtra State. Now, this is the case study that we have. Now, what are the points of discussion? So, the points of discussion are: should the revenues be recognized in point in time basis or on over time basis? In this case, following Ind AS 115, that is on revenues from customer. Now, let me tell you at this point in time, friends, Ind AS 113 talks of two methodologies for revenue recognition, two modes for revenue recognition. One is point in time, and the other is over time. So the transactions of selling of the flats or selling of the commercial offices can happen in two ways, in two modes. One is point in time, and point in time would mean that the flat is ready or the commercial office is ready with the builder. The customer walks in, and both the customer and the builder enters into a negotiation, agree for the deal, and then since the flat is ready or the office is also ready, so the transaction happens in very quickly, where the customer makes the payment of the entire amount and the builder gives the possession and hand over the flat to the customer. And that is point in time. That is mode number one. Mode number two is overtime. So overtime is what typically we all have experienced. So when we bought our flat from a builder, what we did, the project was under completion. We went to the builder. We liked a particular flat or a particular office premises, and we knew that everything was under construction. So we negotiated with the builder. Builder and we signed an agreement with the builder, whereby in that agreement, builder listed out the stages in which the project is going to be completed. That means the flat or the office will be completed in the phase wise manner. And this agreement also incorporated as an obligation for the customer to make the payment to the builder again in phased manner, as and when a particular stage of the project or of the premises was completed. Now, we are not talking of the situation that is point in time. We are discussing this case over time. Point in time, as I said, flat is ready and you sell it. Uh, and point over time is project is not ready, project is under implementation, under completion, and you enter an agreement with the builder for purchasing a flat or for purchasing an office. That is the discussion that we have. And our discussion is, how should the builder in this case recognize the revenue when he is selling a flat or an office which is not yet complete, which is going to be completed over a period of time, and for which he will receive payments from the customer over a period of time. So, this is where the point of discussion is: at what stage should the builder recognize the revenue? Should he recognize the revenue as and when a particular stage is completed, for which he receives the money, and keep on recognizing the revenue in this fashion until the time the entire project is complete and the office or the flat is handed over to the customer? So our point of discussion is this the way in which the builder should recognize the revenue which is over time, or the builder should not recognize the revenue during this intervening period? He should recognize the revenue only when the entire project is complete and when he hands over the possession of the office or of the flat to the customer, whether he should recognize the revenue at that point in time. So that is the point of discussion that we have. Now, I'm not giving any thoughts or any ideas from my side. I would like it to be an interactive session, and I would like to hear from all of you also as to, in your opinion, at what stage the builder should do the recognition of the revenue. Should he do it over a period of time as he completes the project and receives the money, or should he recognize the revenue only when the entire project is complete and when he hands over the possession to the customer? So now, before we move forward, let me pause for a while and make it open to every one of you. And I would like all to hear from all of you as to how you think, at what stage or in which mode the builder in this case should recognize the revenue. It is now open to all of you for next 3-4 minutes. You can come up with your responses. Yes, Srinath, what is your response? Yes, Srinath, what stage should the builder recognize the revenue?
The revenue should be recognized based on the percentage of completion of the project.
Okay, incidentally, in the we are talking about Ind AS 115. We are not talking about AS 7. Remember, we are specifically discussing Ind AS 7. That means we are talking about the entities to which the Indian accounting standards are applicable. And in Ind AS 115, which is applicable to all the listed entities or the entities which are in the process of getting listed, their securities either in India or outside India, or any entity which is a subsidiary or joint venture or an associate company of a listed entity. Uh, so, to all these entities, Ind AS 115 is applicable. And now, please remember, in case of Ind AS 115, there is no concept of percentage completion method or project completion method. There is no such method uh, prescribed in case of India's 115. India's 115 says recognition of the revenue either point in time or which can correspond with, in a way, a project completion method, or it is over time, which means the revenues are to be recognized over the period as and when the builder is completing a particular stage of the project. So, percentage completion method is not there at all as far as India's 115 is concerned. Anyone else, please? Okay. Sorry. So, if there are no responses, we can we will move forward. Yes, Sagar, please go ahead.
Hey, hi Pramod.
Yes, Sagar.
So Ind AS 115 specifies that for some revenue over time,
Hmm.
Ind AS 115 has given three conditions,
Hmm.
out of which if any one of the conditions satisfy, then and only if we can
Sagar,
recognize.
let me interrupt you at this point
Yeah,
in time. See, at the moment, our question is straight away. In this case that we are discussing, how should this builder do the recognition of revenue? We will discuss about the condition as we move forward. But at the moment, our question is whether in this case that we are discussing, the builder should do the recognition of the revenue only after the entire project is complete, that is point in time, or as per India's 115, the builder in this case should do the recognition of revenue as he fulfills the different stages of the obligation that he has committed to the customer. That is the question that we need to respond. So, which of these two, in your view, Sagar, is the mode of revenue recognition for the builder in this case?
so Pramod, I think I joined a little late, so I was
Uh-huh.
not able to read the case. So I won't be able to, I think, answer your query on that.
Okay, case is very simple, Sagar. Case is, we go to a builder,
Yeah,
signs an agreement with him. The project is under completion and it is going to be completed in next 2 years. And the builder in the agreement talks in terms of different stages in which he would be completing the project, and he
yeah.
gives a schedule in that. And correspondingly, I as a customer agrees for making certain payment as and when that particular stage of the project is completed. So this is the simple case that we are talking about. And the question here is, at what stage or how should this builder do the recognition of revenue? Should it keep on doing it as and when the project gets completed, or should it do it at the end when the project is completed in all respects and he hands over the possession of the flat or the office premises to the customer?
In this, then it should be only after the possession is handed over to the customer.
Okay, very good. So, Sagar, according to you, during these 2 years when the project is getting completed, and the project is getting completed in the stages, and for completing those stages, the builder is getting regular payment from the customer. So, according to you, even though the promised stages are getting completed by the builder, and he is also receiving payment from the customer, so according to you, that all these payments which are being received by the builder should be recorded by him only as an advance, and he should do the revenue recognition only at the end of 2 years when the project is completed. Am I right? Is that what you are saying, Sagar?
Yes, correct.
So during these 2 years, no revenue recognition, or revenue recognition only at the end of the second year,
Correct.
at the end of the project completion. Okay. Before we move forward, can I ask you what is the reason for you uh, to have this, to recommend this approach?
Because control is the control of the flat or the property is not getting transferred to the customer.
Mhm.
So Ind AS 115 says that for you to recognize revenue, the control should be handed over to the customer of the
Okay.
goods or services.
Mhm.
So in this case, till the time you have not handed over the possession to the customer,
Okay.
both the
So,
parties,
okay. So according to you, control is passed only when the possession is given. Signing of the agreement, which is getting registered with the Office of Registrar, Government of Maharashtra, according to you, that is not passing on the control of the office or the flat. Is that
correct, because
correct?
because all agreements are generally all agreements are cancelable under RERA. So either the customer can cancel the agreement at any point in time.
Very good. So that means what? Till the time, okay, till the time the agreement is not cancelled, it is enforceable, isn't it? Or it is enforced. Only when it is cancelled, the question will arise only when it is cancelled. So till the time it is not cancelled, it is enforced. Is that correct, Sagar?
Yes, correct.
Okay, so that means till the time it is not cancelled, you will have to assume whatever is mentioned in the agreement and not otherwise.
Yes, correct.
Correct? Huh? And only when the agreement is cancelled, then the matter is over. Because then, of course, since the agreement is cancelled, the question of revenue recognition does not arise because the agreement is cancelled altogether.
Correct.
Okay. So anybody else, I would like, some of you also to respond. I have got views of two people, and the whole idea, why I'm encouraging all of you to participate and give your views, because unless we do that, we will not be able to grasp, the nuances of India's 115. Okay. So let's move forward. Now, what I'm going to cover, just to keep all of us on the same page, let me share with you what all are we going to cover in this session. For us to understand the nuances of India's 115, we really have to deep dive into the entire matter. And therefore, we will start the discussion with purpose of financial statements, and then qualitative aspects of financial statements from the India's framework. Then we will talk about presentation of true and fair view and compliance with India's objective of India's 115, scope of India's 115, defined terms under India's 115. So there are certain terms which have been specifically defined under the India's 115. We will have a look at them and understand as to what those terms are, because those terms definitely are relevant as far as India's 115 is concerned. Then we have just spoken already about it as to what is overtime and what is point in time delivery. So we will also understand this in little more in more details as to what is the meaning of overtime delivery or point in time delivery. Then we talk about performance obligations satisfied in case of overtime versus point in time. Then, of course, identification of contract is very crucial. So, when a contract is to be identified, what are the conditions applicable for the identification of contract as per Ind AS 115? That is what we will understand. Identifying performance obligations. So, what are the performance obligations which form part of the contract? That is what we would understand. And distinct goods or services. Thereafter, we will look at satisfaction of performance obligation, how to know that there is a satisfaction of performance obligation, how to measure or measuring progress towards complete satisfaction of a performance obligation. Now, having discussed this, we now come to the critical aspects, and that is, will the financial statements reflect true and fair view when revenue is recognized based on point in time, when in reality what is applicable is over time? So that is what we will understand. So that in case, if the revenue needs to be recognized based on over time, but if the revenue is recognized following the mode of point in time, now if that happens, will the financial statements of this entity reflect true and fair view? That is the point that we would discuss. Impact of point in time revenue recognition on the financial statements when over time basis is relevant, and that is what we are discussing and focusing. तो अगर what is relevant in a given case that we are discussing is delivery over time, but we do the revenue recognition following point in time, then what will happen to our financial statements, or what will happen to the financial statements of this entity? That is what, or the impact that will have on the financial statements of this entity. That is what we will understand. We will also look at the impact on the key financial indicators. We all understand it very well, that for any entity, it is important that is key financial indicators are sound and strong. Now, अगर हम हमारे इस केस में रेवेन्यू रिकॉग्निशन करेंगे following point in time delivery and not over time delivery, then how the financial ratios or key financial indicators will get impacted? That is what we will understand. We will also look at ICDS, because ICDS, as we know, income computation and disclosure standards are relevant more from the perspective of the income tax liability, and therefore it is necessary to understand the ICDS as well, because if an entity is recognizing revenue following point in time delivery, whereas what is relevant in the given case is over time delivery. Obviously, as someone just now very rightly said, someone said that the revenue will be recognized based on the based on the point in time. That means revenue will be recognized at the end of the completion of the project. Now remember what is going to happen. Since you are not recognizing the revenue, uh, it means there is not if you're not recognizing any revenue, that means you're not showing any income, and if you're not showing any income, you're not paying any tax. So is it possible that the income tax authorities might consider this objectionable, because the income tax authorities may still feel that the entity should have recognized revenue following the overtime, and therefore should have shown the income in the respective financial years, instead of showing the income only at the end of the year. So it is possible that the income tax authorities might find this objectionable, and therefore it is possible that they might consider levying of the interest and penalty. That is what we have to also understand from the perspective of the ICDS. And thereafter, we will come to the impact of revenue recognition on point in time basis on computation of tax liability, and can the tax authorities make out a case of hiding of income and avoiding tax, thereby leaving interest and penalty, as I just mentioned? Finally, what we will do, we will test the entire Ind AS 115, uh, our treatment of revenue recognition from the perspective of the Ind AS 1, which is on the presentation of financial statements, and the qualitative aspects of Ind AS framework, and of course, uh, fair and uh, presentation of fair, true and fair view. So, friend, this is the plan that we have in this session. From time to time, I will uh, keep leaving it open for all of you to add something that you may like to. So please feel free to say something or add something or contribute something uh, about whatever that we are discussing. It is not necessary that you have to agree with me. You can always disagree with me. As a matter of fact, that is what the objective is, because only when you disagree, then only we can really do the dissection of the entire Ind AS 115 and come to a conclusion as to what is the right mode of revenue recognition in case a property, in case a flat is being sold or an office is being sold by a builder, where the project is under completion, and the final delivery of the end product will be at the end of 2 years, but the builder is going to complete certain stages for which he would keep on receiving payments also. So open to all of you in case if you have to say something from your side. Anyone? Okay, so if there are no points, then we can move forward. So let us understand uh, from Ind AS 1, that is presentation of financial statements. Now, what is the purpose of financial statements? Clause 9 of Ind AS 1, which is on presentation of financial statements, uh, states the purpose of the financial statements as financial statements are a structured presentation of the financial position, that is balance sheet, financial performance, that is P&L, of an entity. The objective of financial statements is to provide information about the financial position, financial performance, and cash flows of an entity that is useful to a wide range of users in economic decisions. Financial statements also show the results of the management's stewardship of the resources entrusted to it. So that is what we need to focus on, friends. That what is the purpose of the financial statements? Purpose of the financial statements is that the user of the financial statements are able to take a decision, take an economic decision based on the information which are given in the financial statements. Meaning what? Meaning the information which is given in the financial statements have to be correct, so that the user of those financial statements is able to arrive at a right economic decision. We also look at the financial statements from the qualitative aspects as provided in the Ind AS framework. So Ind AS framework, friends, also talks in terms of the certain qualitative aspects. Now, what these qualitative aspects are, and that is what we have to again remember and keep in mind, because once we keep this framework, these qualitative aspects provided in the framework, it would be very easy for us to differentiate the impact of doing the revenue recognition based on point in time or based on over time. And once we have this understanding of the qualitative aspects, it becomes very easy for us to know as to what should be the right approach for revenue recognition under Ind AS 115. So what are the qualitative aspects? The number one is the understandability. and which of course is quite obvious, relevance, reliability, and comparability. So the financial statements got to be understandable. The information which is given in the financial statements got to be relevant, and there must be reliability. So whatever numbers are being given in the financial statements, they must be reliable, and they must also be comparable. So from period to period, whatever numbers are given in the P&L or in the balance sheet or in the cash flow statement, they must be comparable. They must be comparable. So that is what are the four qualitative aspects. When it comes to relevance, relevance is connected with the materiality. Meaning what? Meaning, what is material? Material is something which is going to influence a decision by user of the financial statements, and that is what has to be kept in mind when presenting the financial statements. Now, how will the reliability be achieved? For reliability to happen, there are five factors that needs to be taken into account, or that these five factors need to be followed for ensuring that there is a reliability. So what those five factors are? Number one is faithful representation. फेथफुल रिप्रेजेंटेशन का मतलब क्या है? फेथफुल रिप्रेजेंटेशन का मतलब ये है कि जो भी आप फाइनेंशियल स्टेटमेंट्स में नंबर दे रहे हैं, whether the CEO of the company or CFO of the company or the accounts team of the company or the finance team of the company or the board of directors of the company or the audit committee of the company. So whatever numbers when they are presenting in the financial statements, this must be a faithful representation. Meaning what? Meaning the CFO, the CEO, the accounts team, the finance team, the board of directors, the audit committee, they should have the confidence, they should have the conviction that whatever numbers are being presented in the financial statements are the right number, and are these numbers are being presented in a manner in which they should be presented. So that means all these people that I have just spoken about, they should not have any doubt in their mind about the numbers which are presented in the financial statements, or the mode of presentation in which they are presented in the financial statement. So all these people got to have a confidence, and that is the meaning of faithful representation. Then the second thing is substance over form, and that means what? That means the what is important is the purpose is more important as not the form. So whatever information is given, it got to be, the focus should be on the substance and not on the form. Neutrality, that means the whatever is presented in the financial statements, it should be free of any kind of bias. Prudence, we all understand very well. And completeness, fifth one is completeness, and that means the financial statements which are presented or which are given to the shareholders and other users, they must be complete. That means whatever information is given in those financial statements, it should be complete in all respect. That means the user of those financial statements should not feel the need to refer something else as far as the company's financial performance is concerned, company's financial position is concerned, or company's cash flow is concerned. So friends, these are the four qualitative aspects, and these are the five factors that need to be taken into account so as to ensure that the numbers and the presentation of the financial statements is reliable. अब ये जो चीज है फ्रेंड्स, हमको ध्यान में रखना बहुत जरूरी है। ये चीज हमको ध्यान में रखना बहुत जरूरी है। क्यों? क्योंकि सवाल ये नहीं है कि हम कौन सा मोड ऑफ रेवेन्यू रिकॉग्निशन यूज करते हैं, कि हम पॉइंट इन टाइम के बेसिस पर रेवेन्यू को रिकॉग्नाइज करते हैं, या फिर ओवर टाइम के बेसिस पर रेवेन्यू को रिकॉग्नाइज करते हैं। सवाल ये नहीं है कि इसमें से कौन सा करें। सवाल ये है कि ये दोनों के क्या इम्प्लीकेशंस हैं, और क्या जो भी हम मोड यूज करें फॉर द रेवेन्यू रिकॉग्निशन, वेदर पॉइंट इन टाइम और ओवर टाइम, we need to ensure that the qualitative aspects as given in the India's framework, those are tested, those are complied with, and that is what is important, and that is the reason why I have discussed with you the qualitative aspects of financial statements as per Ind AS framework. Another thing that we also need to focus, and we all know, and that is clause 15 of Ind AS 1, that is on financial presentation of financial statements. Now, the clause 15 of the Ind AS Clause 15 of Ind AS talks in terms of presentation of true and fair view and compliance with Ind AS. Now, what does it mean? So, the clause 15 of Ind AS 1, which is on presentation of financial statements, it speaks as to when the financial statements would be presenting true and fair view and complying with the Ind AS. So, what it says, financial statements shall present a true and fair view of the financial position, financial performance, and cash flow of an entity. Presentation of true and fair view requires faithful representation. Faithful representation. That means whatever you are presenting in the financial statements, you are confident, you know for sure that whatever is being presented, the numbers which are being presented are correct, and the way in which they are being presented is also correct, and that is the faithful representation of the effects of transaction, other events and conditions in accordance with the definition and recognition criteria for assets, liabilities, income, and expenses set out in the framework. So therefore, how to come to a conclusion whether the financial statements are presenting true and fair view? So according to this clause 15 of Ind AS 1, the application of Ind AS with additional disclosure when necessary is presumed to result in financial statements that present a true and fair view. So that means whatever is given in the Indian accounting standards, Ind AS, if the financial statements are presented as per those Ind AS and the necessary disclosures are given, in that case it can be presumed that these financial statements are presenting the true and fair view of the organization. Uh, Let us look at now specifically provisions of Ind AS 115, which is revenue from contracts with customers. So, what is the objective of Ind AS 115? The objective of this standard is to establish the principle that an entity shall apply to report useful information to users of financial statements about the nature, amount, timing, and uncertainty of revenue and cash flows arising from a contract with a customer. So that is the objective of Ind AS 115. Now, how this objective is met? So, to meet the objective of Ind AS 115, the core principle of this standard is, and that is where I would like all of you to please pay attention and focus. The core principle of this standard is that an entity shall recognize revenue to depict the transfer of promised goods or services to customers in an amount that reflects the consideration to which the entity expects to be entitled in exchange for those goods or services, right? And that is what we got to remember and we got to keep in mind. And let me repeat it once again for the sake of clarity of everyone. To meet the objective of Ind AS 115, the core principle of this standard, that is Ind AS 115, is that an entity shall recognize revenue to depict the transfer of promised goods or services to customer. So that means as and when the entity is transferring the goods or the services as promised, for which it is receiving the revenue or the payments from the customer. So Ind AS 115 says that the recognition will have to be done so as to depict this completion of the obligations by the entity and receipt of the payments from the customer. An entity shall consider an entity shall consider the terms of the contract and all relevant facts and circumstances when applying this standard. So, whatever is mentioned in the agreement that the entity has signed with the customer, so all the terms which are entered into the agreement, all those terms will need to be kept in mind while doing the revenue recognition by the entity. Uh, the clause 5 of Ind AS 115 talks about the entities where the Ind AS 115 is not applicable. So obviously there are certain accounting standards which talks in terms of specific transactions. So when there is an accounting standards available for particular types of transactions, in case of those transactions, Ind AS 115 is not going to be applicable. So, which are those transactions, those types of transactions? So, lease contracts. So, all the lease contracts are governed by Ind AS 117, which is on leases. And therefore, in case of leases, Ind AS 115 will not be applicable. Insurance contracts. So, in case of insurance contract, there is Ind AS 104, which is on insurance contracts. So, all the insurance contracts are specifically covered by Ind AS 104, and therefore, to the insurance contract also, Ind AS 115 will not be applicable. Then financial instruments and other contractual rights, then non-monetary exchanges between the entities in the same line of business to facilitate sales to customers on potential customers. So to such exchange of non-monetary exchanges, the Ind AS 115 will not be applicable. Now let's look at, there are certain terms which have been defined in Ind AS 115 in the Appendix A, which is part of the Ind AS 115. So one important aspect that we need to understand or we need to have a look at, as given in the Ind AS 115 as part of the defined terms, is performance obligation. So what is the meaning of performance obligation? Because all said and done, the confusion is always in the minds of the people as to whether the recognition should be done over the time or should the recognition be done point in time. Now, based on my discussion with professional colleagues, I have understood that there is a common understanding that all the transactions in case of real estate business need to be recognized at the end of completion of the project when the asset in question is handed over to the customer. Now, is that really so? Or it is different? That is what we need to focus on. And for that, we need to understand the definition of performance obligation. So how is performance obligation defined in Ind AS 115? It says a promise in a contract with a customer to transfer to the customer either a good or service or a bundle of goods or services that is distinct, or a series of distinct goods or services that are substantially same and that have the same pattern of transfer to the customer. Now, this is, friends, is what is applicable in the case that we are discussing. The case that we are discussing is what? The case that we are discussing is that you are purchasing a flat. That flat is going to be delivered to you after 2 years. During these 2 years, the builder is going to complete the flat in these stages, and those stages has been entered into the agreement. And for completion of these stages, you as the customer will be making payment to him from time to time. So that is what is performance obligation. So contrary to the belief that the delivery happens only when the flat is given to the customer, what this definition says that the agreement has incorporated certain stages of completion. So as and when a particular stage of completion is done, that means that particular stage is delivered. That particular stage is delivered, and therefore the customer is making a payment to the builder, and therefore uh, in this case the recognition of the revenue should not happen following the point in time. Rather, the recognition of revenue should happen following uh, overtime delivery. So, what is overtime and what is point in time? So, as I have already explained, uh, point in time would mean sale of a ready flat. Point in time would mean sale of a ready flat. So, there's a builder. The builder has completed the project. All the units of the flats or the offices are ready with me, with him, with the builder. Anyone can go to the builder and look at the flats, look at the offices, and whichever flat or the office they like, they can go to the builder and tell the builder, this is what I want to purchase. Builder will tell the customer the price that he has to pay for that particular flat or for that particular office. The customer will make the payment, and the builder will give the delivery of that office, or will give the possession of that office or that flat. So that is point in time. Now, what is overtime sale? Overtime sale is sale of a flat or commercial office when the customer books the flat, executes sale deed, agreeing to make payment to the builder in a phased manner, linked with the stages of completion by the builder. The agreement is registered with the office of the registrar. Now, this is uh, the second mode, and that is mode of delivery, that is overtime. The delivery overtime. That means it is understood, it is generally thought that delivery is only when the flat is ready and the possession is given to the customer. But what Ind AS 115 talks not only of this mode of delivery, Ind AS 115 also talks in terms of delivery, which is in stages, which is overtime, and that is where you sign an agreement. The builder will keep on completing the project in stages. For every time he completes one stage, he will raise an invoice on you as per the agreed terms, and you will make the payment to the builder for that particular stage to be completed. According to Ind AS 115, when that is applicable, that is overtime delivery, the the real estate entity should do the recognition of the revenue as and when a particular stage is completed, and payment for that particular stage is received from the customer. Because as per Ind AS 115, that the entire project becomes a bundle of goods or services. The entire project becomes a bundle of goods or services. So every time a particular stage is completed, that means that particular stage is delivered to the customer. Okay, let's look at another case. Now, before we take another case, let me again throw it open to every one of you. In case if you have any question or you have any doubt, or in case you would like to add something, please go ahead. Anyone? Anyone who's got any point to say? Friends, let's now take another case study. XYZ is purchasing a flat from ANC builder using the overtime mode of delivery. For this, he has taken a home loan from State Bank of India, for which he has created a mortgage on the proposed property by pledging the sale deed with the bank. Now, this is how it is done, and we all understand. This is very common, and this is how the majority of the transactions by the home buyers or the office buyers are done. The flat is 80% complete. XYZ has paid its own contribution, and SBI also has been disbursing the loan based on the demands received from the builder linked with the stages of completion. So this is what has happened so far. When 80% of the flat is complete. Now, tomorrow, for some reason, XYZ defaults in making payment of interest to SBI. And not only he defaults in making the payment to State Bank of India, but XYZ persists in not making payment of interest to State Bank of India for the loan which XYZ has taken from State Bank of India. So this has been going on continuously. So obviously the State Bank of India cannot wait for eternity for the customer to start paying interest. State Bank of India will take these steps for recovery. The State Bank of India will take these steps for recovery. Now, uh, when XYZ does not pay interest, will SBI be able to recover its money against the flat which has been mortgaged in its favor by XYZ? Or the builder will prohibit State Bank of India from doing so? तो सवाल ये है कि क्या स्टेट बैंक ऑफ इंडिया can exercise its rights and recover the money against the flat which has been mortgaged in favor of the State Bank of India, or the builder will come and not let State Bank of India do? An answer, of course, is very simple. State Bank of India will be able to exercise its rights of recovering its dues from the asset, from the flat which the customer, that is XYZ in this case, has mortgaged with State Bank of India. If that be the case, friends, the question arises, who has a control on this flat? Does the builder have a control on this flat, or the customer have a control on this flat? Obviously, it is the customer who has a control on this flat. And why the customer has a control on this flat? Because the builder and the customer have signed an agreement, and as per that agreement, the asset is going to be belonging to XYZ, subject to XYZ and the builder performing their rights and obligation as enshrined in the agreement which both of them have signed. Let us now look at performance obligations satisfied over time versus point in time. So how do we identify the contract? So clause 9 of Ind AS 115, clause 9 of Ind AS 115 is about identifying the contract. And for identifying the contract, there are 5 different conditions mentioned in Ind AS 115. What those conditions are. And remember, uh, all these conditions got to be met. So it's not that one of them or two of them or three of them. All the conditions got to be met. Only then the contract will be identified for the purpose of Ind AS 115. Now, what these conditions are, the condition number 1 is the parties to the contract have approved the contract. That means both of them have approved that contract. That means both of them have agreed on that contract, and both of them have signed that contract. So practically speaking, they have signed the contract. Theoretically speaking, both of them have approved it, even if verbally, as per the business practices of that particular geography. Even if it is agreed verbally, then also it will be complying with the clause A of subclause A of clause 9 of Ind AS 115. Condition B is the entity can identify each party's rights regarding the goods or services to be transferred. Point C, the entity can identify the payment terms for the goods or services to be performed. That means what? That means the contract has to very clearly say as to what the builder has to deliver, goods or services, and the contract also has to very clearly say as to what the customer has to make the payment and when. The subclause D of clause 9 says the contract has commercial substance. The contract has got the commercial substance. That means what? That means the risk timing or amount of the entity's future cash flows is expected to change as a result of the contract. So sometimes it can happen. A contract may have a provision that in certain cases, the builder might charge a certain extra amount for certain reasons from the customer, or he may offer some discount to the customer on account of certain reasons. So when these factors are incorporated, that they would signify that the contract has got commercial substance. And the clause E of the subclause E of clause 9 says it is probable that the entity will collect the consideration. So that means what? That means when the contract is being signed, at that stage, it is probable that the builder or the real estate entity will be receiving the payments from the customer. So if at that stage itself, if it is that the entity is not going to receive the payments from the customer, that means the fifth condition of identifying the contract is not fulfilled, and therefore this contract cannot be the basis for the purpose of revenue recognition as per Ind AS 115. Identifying the performance obligations. Identifying performance obligations at contract inception. So clause 22 of Ind AS 115 talks about identifying performance obligation. And what does it say? It says at contract inception, यानी कि जब वो contract sign हो रहा है उसी stage पर, an entity shall assess the goods or services promised in a contract with a customer and shall identify as a performance obligation each promise to transfer to the customer. So what is going to happen? The contract will say at the plinth level, the foundation level, the parking floor, the basement floor, the first floor, the second floor, all those deliveries, all those deliverables on the part of the builders will have to be assessed at the time of the signing of the contract itself. Then distinct goods or services. So what would it mean? What it would mean as far as the distinct goods or services are concerned? Clause 26 of Ind AS, among other things, recognizes at subclause H, constructing, manufacturing, or developing an asset on behalf of a customer. So that is considered to be a distinct goods or service for the purpose of Ind AS 115. Now, satisfaction of performance obligation. How to identify that there is a satisfaction of performance obligation? And that is where, friends, we need to focus. Now, before I go forward, let me again throw it open to all of you. In case if you would like to ask any question or add something, please go ahead. 2 minutes for all of you. Okay. Satisfaction of performance obligation. An entity shall, and this is where uh, uh, we need to be very clear. An entity shall recognize revenue when the entity satisfies a performance obligation by transferring a promised goods or service that is an asset to a customer. Meaning what? Meaning the contractor and the customer have agreed for a schedule. What schedule? Schedule of completion of different stages of the project. Completion of different stages of the project. So the the builder is agreeing to make deliveries of different stages or completing different stages as per the schedule given in the agreement. Correspondingly, the customer is agreeing for making payment on completion of each of those stages, and that is what the clause 31 of Ind AS 115 talks about. That it says, and I'm repeating it once again for the purpose of clarity in the minds of every one of us, an entity shall recognize revenue when or as का मतलब क्या है? As का मतलब यह है there will be multiple stages. when का मतलब when it is done, that means the entire thing is done in one shot. As का क्या मतलब है? As का मतलब है when it is done in multiple stages. So an entity shall recognize revenue when or as. When it means point in time, as would mean over time. An entity shall recognize revenue when or as the entity satisfies a performance obligation. A performance obligation, because the contract has been signed between the customer and the entity, and it has got multiple stages mentioned of completion of the project. So when a performance obligation, that means one stage is completed, right? And for that one stage, the customer is making payment. According to clause 31 of Ind AS, the business entity, the real estate entity, should recognize the revenue for performing that one obligation at that time. So it does not have to wait for recognizing revenue of that one performance obligation for the entire project to complete. And likewise, the entity does not have to wait for recognizing revenue for all the intermediary performance obligations for the end of the project, for the completion of the project to happen. And that is what is the meaning of clause 31. An asset is transferred. An asset is transferred when or as the customer obtains control of that asset. Now, remember, this is unfortunately misunderstood. Control doesn't mean that the asset has to be in your possession. Control would also mean even if the asset is in the possession of someone who is entitled to the benefits of that asset, he is supposed to be in control of that asset. So the flat for which I have signed a contract with the builder, the flat is under construction. The builder is building that flat in stages. So every time he completes a stage of that flat, remember, control of that stage, once he completes and I make the payment, is not with the builder. It is with me. Physically, the asset is with him, but who is entitled to the interests and the benefits of that stage completed, or all the stages completed up to that stage? Who do they belong to? Can the builder use it for his benefit? Answer is no. On for whose benefit all that can be used? Only for my benefit as a customer. And that is what the builder is doing. So when the builder is completing the project, remember, he is completing the project for whose benefit? That is for my benefit. So when he is completing the project for the my benefit, who has a control on that project? Even though the project is is in the possession of the builder, who has got a control? The control is with me. It is because the benefit of that asset lies with me. Clause 32. For each performance obligation identified in accordance with para 22 to 30, an entity shall determine at contract inception whether it satisfies the performance obligation over time. And that is what we are discussing. Unfortunately or incidentally, the confusion is because people tend to think that there is only one methodology prescribed under Ind AS 115 for the revenue recognition, and that is completion of the project. That is over time, and which is not the case. And what is the case? The case is that the Ind AS 115 provides two modes for the revenue recognition. One mode is a point in time, which that is when the delivery is the asset is completely handed over to the customer, and second is over time, and that is what we are discussing. So clause 32, for each performance obligation identified in accordance with para 2230, An entity shall determine at contract inception whether it satisfies the performance obligation over time, that is in accordance with para 35 to 37, and we will look at that, or satisfies the performance obligation at a point in time, and that is in accordance with para 38. So what we all need to be very clear at this point in time, and that is Ind AS 115 does not talk in terms of only one mode of delivery. Ind AS 115 talks in terms of two modes of delivery, and what those two modes of deliveries are, and that is, one is point in time when the asset is complete and the possession is given, and the builder or the real estate entity will be able to recognize the recognition will be able to recognize the revenue as and when the property is sold and given to the buyer. And the second one is overtime, and that means the entity, the real estate entity is completing the project. The project is getting completed over a period. During that period, the real estate entity is completing different obligations. That means completing different stages of the project, and for completing those different stages of the project, it is receiving payment from the customer from time to time as and when it completes a particular stage of the obligation or particular stage of the project. And therefore, on the for following the overtime, the entity should be able to recognize the revenue as and when it completes perform the particular obligation, and for that it receives the payment. And that means what? That means in case of overtime, the entity does not have to wait for the project to be completed and recognize the revenue. And friends, you can imagine very easily there are consequences. What are the consequences? Now, a company is building a project, and let's say that project has a life of 3 years. Now, we are talking of a real estate project. So, there's a mega city a builder is building. Now, that mega city is going to be completed in 3 years. Now, just think about it. Does it really make sense that the builder should recognize revenue of this mega city at the end of the third year when the entire project has been progressing and getting completed over the years, over these 3 years? And not only it is getting completed over these 3 years, but the builder is also getting payment for all the work that he is completing. Now, you can imagine the consequences of such a way of recognizing revenue on the financial statements and also on the key financial ratios that we will discuss in the course of time now. If an entity does not satisfy performance obligation over time, the performance obligation is satisfied at point in time. So that is also very clear. So two modes, uh, over time or point in time. So if the performance obligations are not being performed over time, it would apparently mean that it is being performed point in time. That means what? That means if there is a ready flat to sell. Now, when there is a ready flat to sell, there is nothing that the builder has to do as far as the completion of that flat is concerned. He just has to receive the money and sign the contract and hand over the possession to the buyer. So there is nothing which is going to happen over time in case of a ready flat. But when there's a project which is under construction, when there is a flat which is under completion, when there is an office premises which is under completion, it is not going to be point in time. It is going to be over time. And when it is going to be over time, the revenues will need to be recognized over time. And that is what Ind AS 115 is very clear about. There is a confusion in the minds of people when it comes to control. And let me try and explain as to what the control would mean in the given case. Control does not necessarily mean control on transfer of the flat when it is complete in all respect. तो कंट्रोल का मतलब ये नहीं है कि जब वो फ्लैट रेडी है और वो रेडी होने के बाद वो जब उसका पोजीशन दिया जाता है बायर को, कस्टमर को, then the control is passed. No, that is control, but that is not the only way of control. By virtue of the sale deed signed between the customer and the builder and registered with the registrar's office, that sale deed being registered with the registrar's office. Control also means the rights which the flat buyer has on the completed stage of the flat booked by him. In simple words, आपने एक जगह फ्लैट बुक किया, आपने 50% फ्लैट का पेमेंट कर दिया, बिल्डर ने 50% प्रोजेक्ट कंप्लीट कर दिया है, आपने 50% उसको पेमेंट दे दिया है। तो अब सवाल ये है कि वो जो फ्लैट का आपने 50% तक का पेमेंट दे दिया, तो उस वैल्यू तक जो फ्लैट है उस पर किसका कंट्रोल है? आपका कंट्रोल है कि बिल्डर का कंट्रोल है? For whose benefit that flat is going to be used here on? Is it going to be used for the benefit of the builder, or it is going to be used for the benefit of you as a customer? Obviously it is going to be used for you, for the benefit of you as a customer, and therefore the builder is working on that flat. Builder is in possession of that flat because the entire project is in his flat, in his possession. But it does not mean that the builder has a control. As far as the control is concerned, even though it is not there physically with you, you have a control. You have a control not by virtue of being in possession of that flat. You have a control on that flat by virtue of the agreement that you and the builder have signed, and that contract has been registered with the registrar office. Not only that, remember, uh, only when you sign an agreement and register it with the registrar, the bank will agree to give you a loan. And remember, why the bank will be agreeing to give you a loan if you do not have a control on that property? So the fact that the bank is willing to give you a loan based on the agreement that you have signed and registered with the office of registrar, that itself confirms that for all practical purposes, it is you who have a control to whatever stage this project is complete, and your control will keep on increasing. So the quantum of your control on that flat will keep on increasing as the builder keep on completing it, and you keep on making payment for it. And once the flat is complete in 100%, then you will have the 100% control. So to the extent it is completed, remember, even to the extent it is completed, to that extent you have 100% control on that flat. And that is what we need to be very, very clear in our minds. Now, satisfaction of performance obligation. So clause 33 talks about satisfaction of performance obligation. Now, what does it mean? It means गुड्स एंड सर्विसेज। अब ये कैसे कैसे मालूम करें कि भाई आपका कंट्रोल है कि किसी और का कंट्रोल है? दैट इज द क्वेश्चन, बिकॉज सी दैट इज द पॉइंट about which most people get confused. Most people tend to think कि control of the flat will be passed on to the buyer only when he gets the possession. Now that I think is completely wrong. That I think is completely wrong. So when he gets the possession, he, remember, at that stage, he not only have 100% control, but he also has possession of that flat. Until then, he has a control on the flat to whatever extent that flat is completed as on a particular date. तो अब सवाल ये कि कैसे आइडेंटिफाई करेंगे, कैसे मालूम करेंगे कि ये फ्लैट पे कंट्रोल किसका है? And that is what is answered by clause 33 of Ind AS 115. So what the clause 33 of Ind AS 115 says? It says goods and services are assets, even if only momentarily, when they are received and used, as in the case of many services. Control of an asset refers to the ability to direct the use of and obtain substantially all of the remaining benefits from the asset. And that is what you have to remember. To remove that doubt from your mind, that control comes only when you get the possession. So what it says, control of an asset refers to the ability to direct the use of and obtain substantially all of the remaining benefits from the asset. So tell me, when the project is getting completed, this project includes your flat also, which is getting completed. Now tell me, who is entitled for the remaining benefits or the existing benefits of this flat? Are you as a customer entitled to the benefits, or the builder is entitled to the benefits of this flat? And clause 33 is very clear. You are entitled to all the benefits relating to this flat, existing and the future ones. And therefore, who has a control on this flat? You have the control, not the builder. Builder is working on this flat for you because you have purchased it, or you have agreed to purchase this from him, subject to he fulfilling certain obligation and you fulfilling certain obligation. So long as both of you are fulfilling your respective obligations, remember the control of the flat or the office will not be with the builder, it will be with the buyer of that flat or buyer of that office premises. Clause 33 further says, control includes the ability to prevent other entities from directing the use of and obtaining the benefit from an asset. So tell me, you have booked an asset in the project of, let's say, XYZ builder, right? Uh, there's an agreement that you have signed with the builder. That agreement is registered also with the registrar. Now, who has a right to direct anyone with regard to that asset? Builder has a right or you have a right? Remember, builder is working, you have a right. Builder is working in exercising your right. Builder is working on your flat, completing your flat, because you have a right in that flat, and builder has an obligation to complete that flat, and therefore the control is with the buyer, with the customer, and not with the builder. So I'm repeating it once again so that we have even more clarity about it. Control includes the ability to prevent other entities from directing the use of and obtaining the benefits from an asset. So, who has the ability to direct other entities with regard to this flat? Only you, as the buyer, has that right, nobody else. Even the builder does not have a right to direct anyone with regard to that particular flat, or that particular office premises. And that is what the control is with you as a customer and not with the builder, which unfortunately is thought by most people. And that is why they get confused and they think that the revenue must be recognized as per Ind AS 115 only on completion of the project and not during the intervening period, which is completely wrong. The benefits of an asset are the potential cash flows. Okay, that's fine. And then, of course, the clause 33 talks about the different situations which can give an indication as to who is entitled to the benefit. And one of the condition is one of the item that it incorporates is pledging the asset to secure a loan. So tell me, the flat which you have purchased, who has a right to pledge that flat for taking a loan? Does the builder have a right to pledge that flat and take a loan? Answer, of course, is no. Who has a right? Only you as a customer have a right to pledge that flat or office for taking a loan. And therefore, according to clause 33, it is you who has a control on that flat or the office premises and not the builder. Clause 35 talks about performance obligations satisfied over time. Now, let me read it out for you. Clause 35 says, an entity transfers control of a goods or service over time and therefore satisfies a performance obligation and recognize revenue over time if one of the following criteria is met. So, clause 35, and please note it, make a mental note, all of you. Clause 35 makes it even more abundantly clear as to, in case of overtime, revenue is to be recognized as and when a particular stage, as incorporated in the agreement, for which the payment has been received by the builder, the revenue has to be recognized in the books of that real estate entity. And I'm repeating it once again so as to have more clarity about it. An entity transfers control of a goods or service over time and therefore satisfies a performance obligation and recognize revenue over time. So please remember, recognizing revenue over time का क्या मतलब है? रिकॉग्नाइजिंग रेवेन्यू ओवर टाइम का मतलब है कि आप इस प्रॉपर्टी के लिए रेवेन्यू एक बार में रिकॉग्नाइज नहीं करेंगे। आप इस एसेट के लिए, इस जो प्रॉपर्टी आप सेल कर रहे हैं, वो जो फ्लैट आप सेल कर रहे हैं, जो ऑफिस प्रेमाइसेस आप सेल कर रहे हैं, उसके लिए आप रेवेन्यू रिकॉग्नाइज करेंगे ओवर टाइम। And why over time? Because you are completing the project over time. You are completing it in the stages for which you are receiving the payment in stages. And therefore, as per Ind AS 115, you will also recognize the revenue in the stages. तो ये क्या बोलता है क्लॉज 35? क्लॉज 35 कहता है कि अगर ये जो तीन कंडीशन है, इन तीनों में से कंडीशन में से कोई भी कंडीशन पूरी होती है, कोई भी एक कंडीशन अगर पूरी होती है, तो रियल एस्टेट एंटिटी टू विच इंडेसेस आर एप्लीकेबल will recognize revenue as and when a particular stage is completed. So what these three conditions are, and remember and make a mental note once again. It is not that all the three conditions of clause 35 are to be met. No, any of the three conditions of clause 35, if is fulfilled, that means the real estate entity will be able to recognize revenue for completion of that particular stage of completion. So what these three conditions are, let us look at them one by one. So condition A is the customer simultaneously receives and consumes the benefit provided by the entity's performance as the entity performs. तो क्या है? एंटिटी ने सर्विस डिलीवर करी, ये राइट, और कस्टमर ने उसको बेनिफिट कंज्यूम कर लिया। तो सर्विस डिलीवर हो गई, बेनिफिट भी कंज्यूम हो गया, तो इसका मतलब द रियल एस्टेट एंटिटी कैन रिकॉग्नाइज द रेवेन्यू फॉर कंप्लीशन ऑफ दिस स्टेज ऑफ द प्रोजेक्ट, दिस स्टेज ऑफ द प्रोजेक्ट। Clause B, the condition B of clause 35, what it says the entity's performance creates or enhances an asset, for example, work in progress, that the customer controls as the asset is created or enhanced. Okay. So second condition is the entity's performance creates or enhances an asset, for example, work in progress. And I'm sure you can understand it very well. जब कोई बिल्डर प्रोजेक्ट कंप्लीट कर रहा है, जब वो प्रोजेक्ट को कंप्लीट कर रहा है, तो उसने जो फ्लैट सेल किए हैं उस प्रोजेक्ट के, या उसने जो ऑफिस सेल किए हैं उस प्रोजेक्ट के, तो जब भी वो एक स्टेज को कंप्लीट करता है, तो व्हाट इज हैपनिंग? द वर्क इन प्रोग्रेस इज इंक्रीजिंग, यस और नो? ऑब्वियसली द वर्क इन प्रोग्रेस इज इंक्रीजिंग, एंड दैट इज व्हाट द कंडीशन बी सेज। सो द एंटिटीज परफॉर्मेंस क्रिएट्स और एनहेंसेस एन एसेट। तो जैसे ही उसने एक स्टेज कंप्लीट करी, इसका मतलब फ्लैट हैज कम closer to the completion, closer to the completion, and that is what the condition B is saying, and that is where the business entity can recognize the revenue on completion of that particular stage. Condition C says the entity's performance does not create an asset with an alternative use to the entity. So it means what? It means when the real estate company is completing a flat or an office for which it has signed an agreement with a customer. Now tell me, can this real estate company have an alternative use of this office premise that he has already agreed to sell someone, or this flat that he has already agreed to sell someone? can the builder or can the real estate entity or can the real estate company have an alternative use of this office or of this flat? Answer is no. Answer is no. So that means what? That means when you have when you have signed an agreement with the builder for buying an office or a flat in a running project, the moment the builder signs a contract with you, signs an agreement with you for the sale of a flat or for the sale of an office, from that moment onward, that builder loses all the alternative rights of using that office or that flat for any purpose other than to complete it for you and hand it over to you. So, therefore, if any of these three conditions are fulfilled, then the real estate company will be able to recognize revenue over time as and when it completes a particular stage of the obligation or of the project. I'm sure this is completely clear and there is no ambiguity and there is no doubt about it. So this confirms that when when a builder, when a real estate company is completing a project, and as part of that project, it has signed agreements with multiple buyers. As and when the entity signs a contract or agreement with the buyer for the flat or for the office premises, it loses the right to use that office or that flat for anything else other than to prepare it to give it to the buyer of that flat or the office premises. And that means what? That means this entity, for completing all these assets for which it has signed the agreement, it would be able to recognize revenue as and when it completes a particular stage of the project as incorporated in the agreement with the customers. Measuring progress towards complete satisfaction of performance obligation. So how to measure? How to measure progress towards complete satisfaction of a performance obligation? So clause 39 of Ind AS 115 talks about it, and it says for each performance obligation satisfied over time in accordance with para 35 to 37, an entity shall recognize revenue over time by measuring the progress towards complete satisfaction of that performance obligation. I'm sure this should not leave any iota of doubt in your mind that an entity which is completing a project, incorporating multiple flats, multiple commercial premises, for which it has signed the agreements with different buyers, the project is getting completed in these stages. As a result of that, all the flats and the offices that it has sold are also getting completed in these different stages. And those stages has been incorporated in the agreement. And that means, according to clause 39 as well, this entity, this real estate company, would be able or should recognize revenue as and when that particular performance obligation is completed. Let me repeat it once again for the clarity of every one of you once again. Clause 39, for each performance obligation satisfied over time in accordance with para 35 to 37 that we have discussed, an entity shall recognize revenue over time by measuring the progress towards complete satisfaction of that performance obligation. फाउंडेशन तक का काम हो गया है, फाउंडेशन तक का बिल रेज कर सकते हैं, उसका बिल रेज कर दिया, उसका पेमेंट आ गया, उसका रेवेन्यू रिकॉग्नाइज कर सकते हैं. प्लिंथ रख गई, प्लिंथ का हो गया, उसका इनवॉइस रेज कर सकते हैं, उसका इनवॉइस रेज कर दिया, उसका पेमेंट आ गया, उसका रेवेन्यू रिकॉग्नाइज कर सकते हैं. ग्राउंड फ्लोर हो गया, उसका रेवेन्यू इनवॉइस रेज कर दिया, उसका पेमेंट आ गया, उसका रेवेन्यू रिकॉग्नाइज कर सकते हैं. फर्स्ट फ्लोर हो गया, फर्स्ट फ्लोर हो गया, for the, remember, now this is where you have to be careful. First floor, now you will be able to recognize the revenue, not for all the flats, not for all the office premises. You will be able to recognize revenue only to the extent of the flats which have been sold and the offices which have been sold. Why? Because for the revenue recognition to happen, a mandatory condition is that the payment also should have been received, or it must be probable that you would receive the payment. So the flats which have not been sold, since they have not been sold, obviously, as it stands today, there is no probability of the cash flow happening with regard to those flats or those office premises. So even if the ground floor is complete, first floor is complete, second floor is complete, third floor is complete, the entity will be able to recognize the revenue in stages over time, but only with regard to the offices and the flats which have been sold, and not for with regard to the unsold offices or the unsold flat. With regard to the unsold flat and unsold offices, as and when they are sold, the entity would be able to recognize revenue up to the stage which have been completed as on the date of sale of those unsold flats and the office premises. The clause 40 says, okay, I'm repeating it once again, clause 39, so that I have, to have it imprinted in our memories. For each performance obligation satisfied over time, in accordance with in accordance with paragraph 35, 37, an entity shall recognize revenue over time by measuring the progress towards complete satisfaction of that performance obligation. Clause 40 says an entity shall apply a single method of measuring progress for each performance obligation satisfied over time, and the entity shall apply that method consistently to similar performance obligations and in similar circumstances. At the end of each reporting period, an entity shall remeasure its progress towards complete satisfaction of a performance obligation satisfied over time. And this is just to reconfirm and recheck that whatever revenue recognition that you have done based on whatever work that has been completed, just recheck that that work that you have assumed to have been completed has really been completed. That is the meaning of clause 40 as 115. Now, the clause 40 talks in terms of a single method of measuring progress. Now, let me tell you what does it mean. In case of a construction entity, completion of the each stage of the civil work and certification of the same by an architect is applied consistently for measuring progress for each performance obligation. Now, this is what is the practice everywhere for all the projects, and this is how the performance is measured. And this method is followed consistently. This method is followed consistently, not only with regard to a one particular real estate entity, but also with regard to all the real estate entities as far as this country is concerned. Let's look at one more, just to have more clarity about the control, because I can understand that most people have a confusion with regard to the control. And their perception or their impression is that the control is passed to the buyer or to the customer only when the possession is given. And that is why they think that as per Ind AS 115, revenue must be recognized only on completion of the project, which is completely wrong. Which is completely wrong. And why it is completely wrong? Let us take a similar kind of an example. Having registered the agreement for purchase of the flat with the registrar, who has the ultimate control on the asset? That's the question. Who has the ultimate control on the asset? Does the builder have a ultimate control on the asset, or the customer has the ultimate control on the flat or on the office premises, or the mortgagee has the ultimate control on the office or on the flat? So to make it simple, let's rule it out. Mortgagee does not have an ultimate control on the office or the flat, because mortgagee's rights are contingent upon the flat buyer, or the flat owner, flat buyer, uh, defaulting in any of his obligation to the mortgagee. Then only the rights of the mortgagee will get invoked, and not otherwise. So long as the flat buyer is paying all his dues to the mortgagee, that is the bank, mortgagee has got no right. All right. Mortgagee's right will arise only when the buyer of the flat or the borrower will be defaulting in any of his obligation of repayment of the interest or the EMI. Then only the rights of the mortgagee will get invoked, and not otherwise. And therefore, mortgagee apparently is not the ultimate control, is not having ultimate control of the flat or of the office. So question remains, who between the buyer or the builder, who has the ultimate control of that flat for which an agreement has already been signed, has been registered with the office of registrar. So let us take an simile. Board of directors of a company, of companies, run and manage the companies all over the world. ये दुनिया में, पूरी दुनिया में ऐसे होता है. तो पूरी दुनिया में जो कंपनियां होती हैं, वो कंपनियों का मैनेजमेंट और रनिंग कौन करता है? बोर्ड ऑफ डायरेक्टर्स करते हैं. बट द क्वेश्चन इज, बट हु हैज द अल्टीमेट कंट्रोल ऑफ द कंपनी? कंपनी को कौन चला रहा है? बोर्ड ऑफ डायरेक्टर्स. कंपनी को कौन मैनेज कर रहा है? बोर्ड ऑफ डायरेक्टर्स. But then who has the ultimate control on that company? Board of directors or the shareholders? Board of directors or the shareholders? Board of directors, remember, act only as an agent of the shareholders. The ultimate control of the company rests with the shareholders. तो बोर्ड ऑफ डायरेक्टर है, वो क्या कर रहे हैं? वो कंपनी को चला रहे हैं किसके बिहाफ पे? शेयर होल्डर्स के बिहाफ पे. So even though the board of directors are running the company, they are running the company for the shareholders. So the ultimate control of the company rests with the shareholders. And likewise, remember, the builder is building the flat, but he is building the flat on whose behalf? He is building the flat on behalf of the buyer of that flat. And if he is building the flat on behalf of the buyer of the flat, then the question is, who has the ultimate right on that flat? Who is entitled to the benefits of that flat? The ultimate right of benefits of that flat rests with the buyer of that flat. And therefore, ultimate control of that flat also rests with the buyer of the flat. And it is assumed that both of them are fulfilling their obligations as captured in the agreement. So likewise, the builder is only performing its stage-wise completion, stage-wise obligations as agreed in the agreement, on fulfillment of which he is receiving payments from the customer, and for which he is entitled to recognize revenue as per clause 39 mentioned above. The ultimate control on the asset rests with the customer. He may not be in possession of the flat, but the ultimate control, ultimate interest on that flat rests with the customer, and therefore it is not necessary for the control to be passed. It is not necessary that possession also has to be passed. Ultimately, possession has to be passed, but does not mean that control passes only with the possession. Control is passed by virtue of legal right. Remember, control is a legal right. Control is a legal right. So control is passed to to an entity, to a person, to a party by virtue of a contract, by virtue of an agreement. And the possession passes by handing it over physically. So let us be very clear about it. The control and the possession not necessarily need to move together. Control will happen prior to the possession. Control can happen prior to the possession. So in case of the mode of overtime, delivery of overtime, the control will get passed in favor of the buyer of the asset as and when he signs the contract with the builder, and possession of course will pass only after the flat or the office is complete. But in case of point in time, both the control and the possession get passed at the same time, because flat is ready, यहाँ साइन किया, यहाँ कॉन्ट्रैक्ट साइन किया, यहाँ पेमेंट दिया, और उधर possession दे दिया, ये लो चाबी, ये लो possession letter, and finish. So both the things are happening. So that is what we need to remember. In case of overtime, control will pass first. Control passes by virtue of a control is a legal right. Control is a legal right. Possession, of course, got to be physical, right? So that is what we have to remember. Will the financial statements reflect true and fair view when revenue is recognized based on point in time when actually over time is relevant? Now, why I'm discussing this point? Because मैंने जो मेरे दो चार लोगों से बात हुई, उससे मुझे जो समझ में आया वो ये कि कुछ रियल एस्टेट कंपनीज जिनको कि इंडिया एप्लीकेबल है, वो ये मान के चल रहे हैं कि इंडिया 115 में ओवर टाइम रेवेन्यू रिकॉग्निशन का प्रोविजन ही नहीं है। उनका ऐसा अजम्पशन है कि इंडिया 115 के हिसाब से रेवेन्यू हैज टू बी रिकॉग्नाइज ओनली व्हेन द प्रोजेक्ट इज कंप्लीट, and that is completely wrong. That is completely wrong. There are two modes provided: point in time and over time. So depending on, we have discussed at length as to what both of these would mean. So depending on the sale which is happening, whether it is happening on in point in time or it is having over time, the revenue recognition will vary differently. तो अब सवाल ये है कि अगर अगर जैसे जो जो मेरे ख्याल में आया है, अगर ओवर टाइम रेवेन्यू रिकॉग्नाइज होना चाहिए, और अगर उसके बजाय एप्लीकेबल केस इज ओवर टाइम, एप्लीकेबल केस इज ओवर टाइम, और ओवर टाइम है तो रेवेन्यू भी ओवर टाइम रिकॉग्नाइज होना चाहिए। लेकिन अगर हम रेवेन्यू को ओवर टाइम रिकॉग्नाइज करने के बजाय पॉइंट इन टाइम बेसिस पे करें, से फॉर एग्जांपल 3 साल का प्रोजेक्ट है, 3 साल में कंप्लीट हो रहा है, तो 3 साल में रेवेन्यू को रिकॉग्नाइज करने के बजाय अगर हम 3 साल जब वो प्रोजेक्ट खत्म होता है उस दिन अगर हम जाके हम रेवेन्यूज को रिकॉग्नाइज करेंगे, तो क्या हमारे फाइनेंशियल स्टेटमेंट्स ट्रू एंड फेयर व्यू देंगे? दैट इज द क्वेश्चन. So let us look at it. So impact of point in time revenue recognition on financial statements when overtime basis is relevant or overtime basis is applicable. कहने का क्या मतलब है? कहने का मतलब है कि हमारा जो केस स्टडी हमने ली है, अगर उस केस में हम रेवेन्यू को ओवर टाइम रिकॉग्नाइज करने के बजाय 3 साल के एंड में जाके पूरा रेवेन्यू को एक दिन में रिकॉग्नाइज करेंगे, तो क्या उससे हमारे फाइनेंशियल स्टेटमेंट्स की क्या पोजीशन होगी? क्या वो सही पोजीशन दिखाएंगे? लेट अस अंडरस्टैंड दैम. So number one, revenue apparently will be underreported for all 3 years, because the revenue recognition is going to happen on the last day, on the day when the project gets completed. So अगर हम 3 साल का प्रोजेक्ट है तो 3 साल तक जो हम रेवेन्यू दिखाएंगे नहीं. क्यों नहीं दिखाएंगे? बिकॉज हम ये मान के चल रहे हैं कि पॉइंट इन टाइम पर रेवेन्यू रिकॉग्नाइज करना है. क्यों? यानी कि जब प्रोजेक्ट कंप्लीट होगा तब जाके रेवेन्यू रिकॉग्नाइज करना है, ओवर टाइम नहीं करना है. तो क्या होगा? ये होगा कि 3 साल तक आप और थ्योरेटिकल अगर एज्यूम करें कि 3 साल और एक दिन का ड्यूरेशन है, तो 3 साल तक आप जीरो रेवेन्यू दिखाएंगे उस प्रोजेक्ट के लिए, और सडनली 3 साल खत्म होने के जो एक दिन होगा जब वो प्रोजेक्ट कंप्लीट हो रहा है उस दिन आप सडनली सारा रेवेन्यू बुक करेंगे. इसका मतलब क्या हो गया? इसका मतलब ये हो गया कि 3 साल तक आपके फाइनेंशियल स्टेटमेंट्स आपकी रेवेन्यू को अंडर रिपोर्ट करेंगे. गुड साइन और बैड साइन? ऑब्वियसली बैड साइन. Current liabilities will keep on ballooning on account of receipts from customer accounted as advances. So अब क्या होगा? 3 साल तक जो आप काम कर रहे हैं, पेमेंट तो आपको आ रहा है कस्टमर से, बिकॉज आपने वो एग्रीमेंट साइन किया है कि जैसे ही आप कोई स्टेज कंप्लीट करेंगे, दी कस्टमर हैज टू गिव यू द पेमेंट. सो कस्टमर आपको पेमेंट दे रहा है, लेकिन आप रेवेन्यू रिकॉग्नाइज नहीं कर रहे हो. अगर आप रेवेन्यू रिकॉग्नाइज नहीं कर रहे हो तो ये सारे पेमेंट आपके बैलेंस शीट में आके बैठेंगे. कहाँ बैठेंगे? Advances from the customer. Now, if what is going to happen as a result of that? The the amount of your current life, supposedly current liabilities, will keep on ballooning year after year. यानी कि पहले साल में 100 करोड़ होंगी, वो 200 साल के एंड में जाके 200 करोड़ हो जाएंगी, तीसरे साल के एंड में जाके 300 करोड़ हो जाएंगी, और जैसे ही चौथा साल शुरू होगा फट करके जीरो हो जाएंगी. टेल मी, इज इट करेक्ट अकाउंटिंग? इज इट करेक्ट अकाउंटिंग? आर योर नंबर्स कंपेरेबल? Of course, your numbers are not comparable. Is it correct accounting? In my view, at least, it is definitely not correct accounting. So, on one hand, what is happening is कि आपकी current liabilities are ballooning because you are receiving the payment and you are not booking those revenues. On the other hand, what is happening is your project is getting completed, your flats are getting completed, everything is getting completed, and still, and remember, you're giving the possession only at the end of the third year. So, what is also happening simultaneously कि जो जो आप काम करते जा रहे हो वो सारा कहाँ जा रहा है? WIP जा रहा है. WIP is all going into WIP. So on one hand, your current liabilities on account of advances from the customer is increasing, ballooning, and on the other hand, your assets on account of work in progress is ballooning. So let's say what is going to happen again, पहले ईयर में 80 करोड़ का, दूसरे ईयर में 160 करोड़ का, तीसरे ईयर में 240 करोड़ का is going to be a work in progress. Are your numbers comparable? Is it right accounting? At least in my understanding, it is not right accounting. Number 4 is cash flow reports cash inflows on account of increase in current liability. अब आप समझ लीजिए, ये जिस कंपनी की हम बात कर रहे हैं, जिस केस की हम बात कर रहे हैं, 3 साल का प्रोजेक्ट है, 3 साल आपके पास में पेमेंट्स आ रहे हैं, करंट लाइबिलिटीज आपकी बढ़ रही हैं, लेकिन करंट लाइबिलिटीज आपकी बढ़ रही हैं, लेकिन आपकी वर्क इन प्रोग्रेस भी साथ से साथ साथ बढ़ रही है. तो your cash flow statement will show increase in inflow, cash inflow, on account of increase in the liabilities and not on account of cash flow from the operating activities. Now, really speaking, ये जो payment आपको customer से आ रहा है, all this payment which is coming to you is coming to you on account of the operations. But because you are booking you are recognizing revenue at the end of the year. So what is happening is your cash flow statement will also be distorted. Why will it be distorted? It will be distorted because the cash flow that should be forming part of the cash flow from the operating activities, that cash flow will be coming on account of the increase in the current liabilities. Okay, which again, in my view, is not right accounting. Point number 5, inconsistent financial reporting of P&L, balance sheet, and cash flow. And I'm sure you can understand your numbers are not going to be comparable at all because year after year, your WIP will keep on increasing, your advances from the customer will keep on increasing for 3 years for the duration of the project. And suddenly one day, zup करके वो सब नीचे आ जाएंगे. Right accounting, wrong accounting? In my understanding, it is wrong accounting. The basic tenets of financial reporting are completely ignored, and that is what we will understand. तो अभी हमने देखा कि अगर जब हमको रेवेन्यू रिकॉग्नाइज करना चाहिए ओवर टाइम और हम रेवेन्यूज को रिकॉग्नाइज कर रहे हैं पॉइंट इन टाइम, तो उसकी वजह से फाइनेंशियल स्टेटमेंट पे, बैलेंस शीट पे, P&L पे और कैश फ्लो पे क्या इम्पैक्ट आता है वो हमने अब देखा. अब हम क्या देखेंगे? अब हम देखेंगे कि बिकॉज ऑफ द सेम थिंग, because of not recognizing revenue over time, that is what you should do. You are recognizing the revenue point in time, that is on completion of the project. What impact it is going to have on your key financial indicators? Let us have a look at them. So I'm sure you can very easily understand, for first 3 years you are not recognizing the revenue. Since you're not recognizing the revenue, your gross profit ratio, your net profit ratio, your earning per share ratio, your return on capital employed, your return on equity, your return on investment, your PE ratio, your debt equity ratio, all will go for a toss. Why? Because you're not recognizing revenue. Since you're not recognizing revenue, obviously you will not have a gross profit. So because you're not recognizing revenue, you're not recognizing expenses. All your expenses are going into WIP. So therefore, you will not have a gross profit. Virtually speaking, you will not have any of those things, and therefore all your financial indicators will go for a toss. So gross profit kaho, net profit kaho, earning per share kaho, return on capital employed kaho, return on equity kaho, return on investment kaho, price to equity kaho, debt equity kaho. So all your ratios will be completely distorted. Those ratios will have no meaning whatsoever, and they will definitely not be comparable also from year to year. Your current ratio and your quick ratio will also be distorted, because what is happening? On one hand, your advances from the customer are ballooning, and on the other hand, your WIP is ballooning. So your current ratio and your quick ratio will also be distorted. Please remember, many of these ratios that we are talking about, many of these key financial ratios that we are talking about, they are required to be disclosed as per Schedule 3 of the Companies Act in the financial statements. And you can imagine, तो पहली बात तो क्या हो रही है कि आपके financial statements distorted हैं. And since your financial statements are completely distorted, your financial ratios are also distorted. If your financial ratios are also distorted, now tell me, are you presenting a true and fair view of your business and its operations? In my view, not at all. Financials of 2 years will never be comparable, which of course I do not even talk about, because it is so clear, crystal clear. Let us also understand what can be the implications of not recognizing revenue over time. In our case, study that we are talking about, instead recognizing the revenue point in time. So what can be the implications of this on computation of tax liability? Obviously, now is quite clear. For first 3 years, you're not recognizing revenue. You're not recognizing revenue, and therefore you're not showing any profit. You're not showing any profit. Apparently, you're not showing any tax liability. And suddenly in the fourth year, you will recognize the revenue, you will book the expenses also, you will have a gross profit, you will have a net profit, and you will also have a tax liability, and you will pay that tax also. Is there a possibility that the tax department will come back and tell you that by not recognizing revenue in first 3 years, you have hidden income and thereby avoided paying tax to the government? Hence, we are reworking on your accounts, recognizing the revenue for last 3 years, computing your tax liability for last 3 years. And since you have failed to pay that tax liability, we are levying penalty and interest on that amount. Can the tax department take that position? Now, friends, in my view, they definitely can. They definitely can. And why they definitely can? Because we all are aware that we also have income computation and disclosure standards, ICDS as we call them. And if you look at the ICDS, the 10 ICDS that you have, you would realize that the objective of those 10 ICDS, the stated objective of those 10 ICDS issued by the Income Tax as per Section 145, subsection 2 of the Income Tax Act 1961, the stated objective is to ensure that the profit of the company and the book profit of the company and taxable of the profit of the company are aligned. And if that alignment is missing because you have recognized revenue not over time but point in time, what the tax department would say, restate your account for the purpose of income. You do whatever you want to do for the purpose of Companies Act. We are not bothered. For the purpose of income tax, restate your accounts, compute your tax liability, and pay the tax liability together with penalty and interest. Can they take that position? The fact that the income tax department came out with the ICDSs, the purpose was only to ensure that by using accounting, the assessees should not be able to to evade tax or whatever, play with the tax amount. That is the whole purpose. So in my view, that danger is definitely there, more so in today's environment. And why in today's environment? No, acha. Now let me also tell you, incidentally, there are two ICDSs with regard to revenue recognition. There is ICDS 3, which is on construction contracts, and there is ICDC 4, which is on revenue recognition in general. In general. Now, when you study these two ICDSs, that is ICDS 3 on construction contract and ICDS 4 on the revenue recognition, you would realize that ICDS 3, which is on construction contract, and there is a judgment of High Court, Delhi High Court, which is reaffirmed by the Supreme Court, that for the purpose of tax liability, the ICDS 3 on construction contract is not relevant as far as the real estate businesses are concerned. So ICDS 3 is supposed to be relevant only for the purpose of normal contracts, normal construction contract, not for the builders. When they are when they are selling the offices, to that ICDS 3 is not applicable. As regards ICDS 4 on revenue recognition, in the scope, itself says that ICDS 4 is not applicable in case of the real estate contracts. As a result of that, the department thought of bringing out ICDS 11, which was supposed to be meant for the real estate business. They came out with a draft, and that draft has not been implemented. One of the reasons given by the department behind not implementing the draft Ind AS 11 on the real estate business, and that is, they say that Ind AS 115 sufficiently covers the requirement of revenue recognition from the perspective of the income tax department, and therefore the urgency for implementation of ICDS 11 has not been felt. The draft was brought out in 2017, and since 2017 it is lying in abeyance. So meaning what? Meaning the income tax department also considers Ind AS 115 relevant as far as their perspective is concerned, their interest is concerned, and their angle is concerned. So if an entity to which Ind AS 115 is applicable makes a mistake in recognizing revenue, when the revenue should have been recognized following over time, it has been recognized following point in time, it is full possibility that the income tax department will take the position that the revenue needs to be restated, tax liability needs to be recomputed, and the entity needs to pay the interest and the penalty together with, of course, the applicable amount of tax. And that, in my view, friends, is definitely there, more so in today's scenario when AI is becoming the order of the day, right? So, with the help of AI, it is possible for all the departments and for everyone to find out any anomaly in any document. It is so simple. And therefore, income departments will not let go such an opportunity to go. And therefore, those of you who are associated with the listed entities or the entities to which Ind AS 115 is applicable, I will very strongly suggest and recommend have a look at your methodology of revenue recognition. Ensure if the mode of delivery is overtime, ensure that you recognize the revenue based on the overtime and not based on the point in time. Because if you do that, you run the risk of all that we have discussed a little while ago. Under the Income Tax Act, friends, several sections deal with concealing or non-disclosure of income aimed at curbing tax evasion. And we all know, so Section 68 is about unexplained cash credits. Section 69 is about unexplained investments. Section 69A is about unexplained money. Section 69B is about amount of investments not fully disclosed. Section 969C is for unexplained expenditure. That means if you have incurred certain expenditure, you have claimed them in your tax working, but you're not able to explain to the authorities as to where those expenditures have been incurred. Now, obviously, under Section 69C, all those expenses that you have claimed as deduction will be added back to your income, and you will need to pay tax on that income. Section 139, subsection 1 is about a requirement to file return. Section 271C, and that is what becomes relevant in our case, penalty for concealment of income. Remember, the department is not friend of anyone. Department is friend only of the revenue. Revenue, if it is hidden or tried to be evaded by anyone, the department is going to catch such entity by neck and ensure that whatever tax liability they should have paid, they pay. And therefore, Section 271 1C, penalty for concealment of income, uh, can be invoked, in my view, in case if an entity recognizes the revenue on point in time basis when it should have recognized the revenue on overtime basis. What are the consequences of Section 271(1)(c)? If the assessing officer finds that the taxpayer has concealed income or furnished inaccurate details, a penalty ranging from 100 to 300% of the tax evaded can be imposed. I have just discussed with you what will be the impact of incorrect accounting on your financial statements. What will be the impact on your key financial indicators? And therefore, uh, your case will definitely fall within the ambit of Section 271(1)(c), and therefore you may be liable. That entity may be liable for a penalty that may range from 100 to 300% of the tax evaded, and that is what we need to be careful of. Section 271A penalty on undisclosed income in cash of such in case of searches. I'm just giving this only as an additional input. Section 271 penalty for unexplained cash credits. Section 276C prosecution for willful attempt to evade tax. Section 278 abatement of false return or statement. So we have to be additionally careful of the dangers of Section 271(1)(c), penalty for concealment of income, where the penalty may range from 100 to 300%. Remember, any amount of explaining at that point in time may prove absolutely futile. And why futile? Because Ind AS 115, in my view, is absolutely clear. Either you recognize your revenue based on overtime, or you recognize your revenue based on point in time, but make sure that you recognize revenue based on the overtime when your project is getting completed over a period. You recognize revenue in case of point in time when your revenue is getting generated, when the property is ready for sale, and across the board, across the table, you are doing the transaction. These provisions, of course, are crafted to deter tax evasion by penalizing concealment and ensuring compliance with the tax laws. Now, let's come to the last end of our discussion, friends, today. So, is it in order to recognize revenue based on point in time when overtime is applicable and relevant? Answer, of course, is not in order completely. एक बार और चेक कर लेते हैं कि अगर हम ऐसा करते हैं, अगर कोई कंपनी पॉइंट इन टाइम की जगह अगर कोई कंपनी ओवर टाइम के जगह पॉइंट इन टाइम के बेसिस पर रेवेन्यू को रिकॉग्नाइज करती है, तो क्या वो सही है? टेस्ट करते हैं। वी विल टेस्ट इट बेस्ड ऑन व्हाट वी हैव डिस्कस्ड अर्लियर। तो पहले देखते हैं कि पर्पस क्या है। व्हाट इज द पर्पस एज वी सॉ इन द बिगिनिंग ऑफ दिस डिस्कशन? The clause 9 of Ind AS 1 on presentation of financial statements talks about the purpose of financial statements. तो हमको ये पूछना है कि अगर हम ओवर टाइम की जगह पॉइंट इन टाइम के बेसिस पर रेवेन्यू रिकॉग्नाइज करेंगे तो क्या हमारे फाइनेंशियल स्टेटमेंट इंडियस का जो पर्पज है उसको सर्व करेंगे? And answer is, of course, no. So financial statements, the objective of financial statement is to provide information about the financial position, financial performance and cash flow of an entity. अभी हमने देखा कि अगर आप जब आपको ओवर टाइम के बेसिस पर रेवेन्यू को रिकॉग्नाइज करना चाहिए, अगर आप उसको पॉइंट इन टाइम के बेसिस पर रिकॉग्नाइज कर रहे हैं, व्हाट इज गोइंग टू हैपन टू योर P&L? Your P&L is going to be distorted. What is going to happen to your balance sheet? Your balance sheet is going to be distorted. What is going to happen to your cash flow statement? Your cash flow statement is also going to be distorted. So if that is the case, then are your financial statements serving the purpose? Answer is no. We also discussed the qualitative aspects of financial statements. तो आज हमने डिस्कस किया कि हमारे फाइनेंशियल स्टेटमेंट्स पूरे डिस्टॉर्ट हो जाएंगे, तो अगर हम रॉन्ग अकाउंटिंग करेंगे तो समझ के लेना क्या हमारे अकाउंट्स हमारे फाइनेंशियल स्टेटमेंट्स will have the understandability? Answer is no. Will have the relevance? Answer is no. Will have the reliability? Answer is no. Will have the comparability? Answer is no. Will that presentation, when you are supposed to be using overtime method of recognizing the revenue and you are using a point in time method of recognizing revenue, is that faithful representation? Answer is no. सब्सटेंस ओवर फॉर्म है का नहीं है, न्यूट्रलिटी है बिल्कुल नहीं है, प्रूडेंस है बिल्कुल नहीं है, कंप्लीटनेस है बिल्कुल भी नहीं है। और अगर ये जो एंड दीज आर द थिंग्स विच आर रिक्वायर्ड एज पर द इंडियस फ्रेमवर्क, तो अगर ये सारे के सारे क्वालिटेटिव एस्पेक्ट्स हमारे फाइनेंशियल स्टेटमेंट्स में नहीं है, आर बी डूइंग राइट थिंग? नाउ यू, आई एम श्योर, कैन आंसर द क्वेश्चन. Will our financial statements present true and fair view? And I'm sure you can answer this question as well. So this, friends, is all about the Ind AS 115. In my view, all of us need to be very careful, more so the people who are associated with the entities, with the real estate entities to whom Ind AS 115 are applicable. You need to be careful in recognizing the revenue, ensure, check as to what is that is applicable in the given case. Is the given case pertain to delivery based on overtime? Then do recognize the revenue based on the overtime as prescribed in Ind AS 115, clause 35, clause 37, so on and so forth. Is the delivery based on the point in time? Then of course recognize the revenue based on the point in time. If you do that, there will not be any danger, there will not be any risk. And if you don't do that, then I have already spelled out as to what kind of dangers and non-compliances you will be committing. So friends, this is all from my side, and let me once again make it open to all of you in case if you have any question. Anyone? All of you can, of course, now open your videos. You can switch on your videos. Yes, Prashant, do you want to say something? Okay, I can go to the chat box and let me see in case if there are any question. Revenue can be recognized when at least 25% of the amount is received. See, Prashant, that relates to AS 7 and not to Ind AS 115. based on percent completion. Now, again, based on percent completion is something which is in AS7 and not in Ind AS 115. In practice, a small group follows completed basis, which is small groups. So when you say small groups, I would assume what you mean to say is are the entities to whom Ind AS 115 is not applicable. What is applicable to them is AS7, and therefore, if they are following the completed basis, both these methods are given in AS7. But the income tax department, remember, is more prone to consider the percentage completion method and percentage completion method and not the project completion method, for the obvious reason, because when you use the percentage completion method, you are recognizing revenue as and when it is happening. In case of percentage completion method, it is quite possible that in one particular year you may not have any revenue, and whereas in the subsequent year you will have more revenue, but you would have saved paying taxes in the first year, and that may not go well with the tax authorities. When significant risk and reward is transferred to the customer, remember this is something which is again in AS7. In case of Ind AS 115, it's not there. Ind AS 115, what is important is that the builder is completing his obligation, that is stage completing the stages, and the customer is making the payment. Okay, it's actually agreement to sale. Yes, of course, that will be work in progress. Would revenue have to be recognized in respect of letter of allotment issued? Okay, so would revenue have to be recognized in respect of letter of allotment issued? Okay, so remember, letter of allotment is still uh, is still is still not final. It does not have the finality. The finality will arise only when uh, one second. So the question is, would revenue have to be recognized in respect of letter of allotment issued? So in my view, obviously not, because letter of allotment does not have the finality. Plus, it is only merely a letter of allotment. The finality will accrue only when there is an agreement signed between the builder and the customer, and that agreement is also registered with the registrar. So the finality will happen at that stage. And remember, all the obligations will not be incorporated in the letter of appointment. The obligation of the builder will be incorporated only in the agreement, and therefore revenue will not be recognized and should not be recognized when there is only a letter of allotment is issued. Can we take a hypothetical example of actual accounting for revenue recognition? Yeah, because I think I have discussed that in absolutely great detail. So why hypothetical example? You can do actual accounting based on what we have discussed, following the provisions of Ind AS 115 as we have discussed. So friends, with this, I think uh, we can conclude. Thank you so much uh, for your uh, participation and for your joining this web.